Welcome back to another episode. Today, we're going to take a closer look at AMD earnings. Unfortunately, the morning after the stock is down roughly 5%. But if you are watching this a few days later, don't worry, we are going to take a closer look at a lot of information on just the overall earnings. So even if you're a bit late, we're going to learn a lot about what happened during the earnings call, what are some of the major changes, closer look at valuation, and so much more. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Right now, we are getting a lot of kind of negative sentiments from analysts reducing their price targets after yesterday's earnings. We can see Truist reduced their price target to 162 from 174. We also saw Piper Sandler decrease it to 175 from 195. And we see a lot of other companies do the same after earnings. So overall, it does seem like AMD analysts are not really liking the overall report. On today's episode, I want to say this might be probably one of the first times where I might consider adding AMD into my position again. AMD is my number 2 portfolio, and I have talked about how in the past I personally have seen AMD be a little bit overvalued compared to the expectations that I thought analysts and investors were seeing for the company, especially for the GPU side. We can see from probably its overall 52-week high, the stock is down over 25%, not counting this pre-market drop. And if we go to $150, this is going to be to prices we last saw in early January, but I do want to say there have been a lot of changes that have happened since January. Right? There's been more updates to the overall market. So even though if maybe in January I might have said that 150 might be too high, obviously there's been a huge shift in the AI market, in the computer market, and we know a lot more than we learned a few months ago, that now my price thoughts have changed maybe a little. So let's take a closer look at this presentation I have set up. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. All right, so first, just a quick earnings overview. Revenue came in at roughly $5.47 billion. It did beat by a small percentage. We can also see that earnings per share were 62 cents versus estimates of 61 cents. So nothing that would drive any form of crazy price action here. I guess, again, investors might be expecting a lot from AMD, especially for their MI300X. Overall, we can see that revenue was up 2% year over year, but it did have a decline of 11% quarter over quarter. Obviously, quarter four, or last quarter, tends to be one of the strongest for a lot of electronic companies. But overall, we can see that it is up year over year as we are seeing improvements in a lot of markets. Unfortunately, we are seeing kind of weaknesses in other markets. What's very important to also note is we did see a nice growth in gross margins of 3 percentage points. And this is because same time last year, we kind of had the over inventory correction in the PC client side. So there was a lot of price offering on a lot of PC products due to over inventory issues. Now over inventory issues have kind of eased up a lot, and that's going to help overall gross margins improve. Now, the company did give us guidance for quarter two, and for quarter two, they expect to have roughly $5.7 billion. Now, if we compare this to what analysts were expecting, is pretty much in line, which was roughly $5.69 billion. So again, a small beat on revenue expectations for next quarter. This would again be a nice year-over-year growth, and it just continues to showcase that, hey, look, over inventory issues that we saw last year are pretty much over in certain markets. Unfortunately, we are still seeing some weakness in others. The second thing we're seeing is obviously a nice boost from their data center market and the MI300 platform. We can see earnings per share is expected to be roughly 69 cents next quarter. Now, I want to talk about each individual segment and kind of share my overall thoughts. Obviously, I have some points from their PowerPoint presentation, but I also have a lot of notes from the overall transcript. So we can see data center was up roughly 80% year over year. Operating margins did increase a bit, and one of the main reasons we are seeing revenue up a huge amount, is record data center GPU sales increased dramatically. Obviously, the MI300X is ramping up. I believe the first quarter it came out was fourth quarter of 2024, and that was around $400 billion. If it's now surpassing in 1 billion in the first quarter of 2024, that's expected to maybe see a $600 million in revenue from the MI300X. So right now we are seeing some growth here, and we're going to see that AMD is expecting to kind of increase ramp over time throughout the upcoming quarters. Now, I guess what many investors here are expecting is to see a crazy, crazy shoot up as we saw with NVIDIA. I don't think that's going to happen this year. I don't know if it's going to happen next year, but right now, I guess this is what's really causing a lot of fears from investors, as they were hoping this would be the next NVIDIA. Outside of their GPU side, we do have some strength in the CPU side. One thing that we have talked about in this channel is the enterprise. That's a market that AMD has been very, very underrepresented in. They have their server CPUs in a lot of cloud and clients, a lot of cloud solution customers, but they don't have much in the enterprise market. And they are seeing growth there right now, and they are accelerating their deployments into that industry, which can be a nice growth opportunity for their server CPUs. They also mentioned that the fifth generation of their server CPU is expected to launch later this year to help maintain leadership for them in the server CPU side. Now, unfortunately, while the company is seeing huge growth in their data center GPU side, the CPU side is seeing some form of seasonal decline. And this is something that we're seeing a lot of the wallet shifting is shifting to accelerated computing outside of traditional computing. We're also seeing a lot of competition here in the server CPUs. So this is server CPUs, in my opinion, is not going to be the biggest growth opportunity for AMD, and it's something we've talked a lot about in this channel, with big techs creating their own CPUs, with heavy competitions from companies in the x86 market. And right now, AMD has mentioned that for them, the biggest growth opportunity and the biggest growth driver for AMD is going to be their GPU sales. Now, from the data center side, we do have some great information from the transcript. Lisa Su mentions that they believe they gained server CPU revenue share in this seasonally down first quarter. The reason they talk about revenue share is because now CPUs are selling at a higher sales price if you have more cores, and it's better to look at revenue share opposed to shipment shares instead. They also believe that they are seeing improvements of kind of general purpose and AI compute capacity in the enterprise side, which can obviously bode well for both their server CPU and their server GPU sales. Lisa does mention that the MI300 demand continues to strengthen, and the overall customer engagement is going pretty strong, that they're able to increase their previous guidance from $3.5 billion up to $4 billion this quarter. And I think this is what we're going to continue to see every quarter, is small sequential $1 million increases. Maybe by the end of the year, we might have somewhere around $5 billion in 2024. And they mentioned that right now it's more of a supply chain issues than demand. So obviously they still have the ability to increase their supply in 2024, but at the end of the day, they're going to be supply constrained opposed to demand constraint with the way the AI market is happening. So that's why I believe in the upcoming quarters, we're going to continue to see this GPU revenue exceed these expectations. Maybe next quarter, another 500 million, maybe 250 million increase, but they are trying to work with their manufacturers to increase their overall supply. For those that are not familiar, though, the MI300X does have some very special type of advanced packaging that's very supply constrained. And this form of advanced packaging is more advanced than the CoWoS that NVIDIA uses in H100, and for that reason is even more supply constrained. So right now, that's why we don't really see much of a huge growth in the MI300X. Lisa Su does mention that the MI300X is great sweet spot for inferencing, and that they are most likely going to bring additional products later this year for the GPU market. So maybe the MI350X might be appearing soon, and we might hear about that in the upcoming months. Some other great news about the data center: they still believe that the total addressable market is about 400 billion in 2027. So that's bullish for AMD and anybody else that deals in the AI accelerator market. Wink, wink, wink. And one thing, the MI300X right now is not in gross margins to their corporate average. And that's something that will improve over time as corporate margins, as ramp continues to grow, gross margins for the MI300X should improve, which should obviously help increase the earnings per share and net income in the upcoming quarters. Now, in the client side was up 85%, and we can see it is now profitable out after that huge inventory correction issue we saw in this space. The only thing I want to say here in the client side is we are seeing this push of the refresh cycle as well as AI PC. And all this as AMD is releasing their next generation server client processor, Strix Point, which is going to be meant for AI PCs, launching in the second half of this year. AMD believes that they can grow market share here. Now, the bad, unfortunately, the gaming segment is down 48% year over year, mainly because, right, the console market is now in the fifth year. So, Sony, Microsoft are not buying chips for their Xbox, for their PlayStation. This was expected. Now, the embedded market is down roughly 46%. We did expect this as well, but luckily the company did give us some form of update that they expect a gradual recovery in the second half of the year. So that could be bullish in the long term, as the embedded market is a huge cash flow for AMD and can help improve overall cash flow and earnings per share in the future. Now, the final thing I want to take a closer look at is valuations. For me personally, I believe a price below 150 is a great time to do some dollar cost averaging on AMD. We can see at a price of 150, the forward PE, which is the current fiscal year, which ends in we're in quarter two now, right? So in theory, it ends in about 2 to 3 quarters. That's about 41 right now. So within the next 9 months. Now, forward 1 year PE ratio, which is the next fiscal year, so about a year and 9 months from now, the PE ratio is 27. I think anything as we get into the mid 20s is definitely a nice opportunity. As well, I don't believe AMD is the next NVIDIA. Their MI300X definitely has the opportunity to grow. So, in the past few months, I have said that AMD has been overvalued, in my opinion. I think those overvaluation fears are over. I don't want to say it's extremely cheap. I think it's a little bit more of fairly valued at the moment. So, obviously, the cheaper the better. But right now, if I was looking for a long term add to AMD, I wouldn't regret, with what I know right now, adding at these levels in forms of growth opportunities and valuations. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.